All right, well, good morning, everybody. Welcome, Miami Edison Senior High School. My name is Tanya Reynolds. I am the proud program director for an organization called Learning for Success, where we are basically in the business of career development for our youth and leadership skills for our youth. Part of what we do is bring partners like Bank of America to our schools to bring you guys important information that will help you in the future. So today is all about financial literacy. We have 1 hour, and I'm very pleased to introduce the Bank of America team. I'm not sure if Crystal is on, but I would like to, if she's not, Crystal, are you there? Okay, I'm going to go ahead and pass it right over to Alexis. But before I do, this is intended to be a conversation. The first two sessions were wonderful with Tommy and Alexis presenting. We want you guys to ask as many questions as you want to these financial representatives. Every question is important. Don't feel shy. Feel free to take yourself off mute and ask as many questions as you like, because this is a chance for you to really interact with someone from the bank and really be educated on what they have to say. So I'm going to go ahead and pass it over to Tommy or to Alexis. Who's going to go first? Alexis?
Hey, so I'll kick us off, and then I'll give it over to Alexis, since he's going to be mainly facilitating. So good morning, Red Raiders, and thank you for giving Bank of America the opportunity to be in your home today to discuss financial literacy. I hope that you take a lot from what the information that we're going to share with you today. And this is your time, so please engage us, ask questions. The goal is that no matter what financial goal you have, how big your aspirations are, I'm here to tell you that you can achieve all your dreams, right? With a little bit of skill and some discipline and some good budgeting and money management, you can achieve all your aspirations. So, I'm really excited for the information that Alexis is going to share with you today. So without further ado, I'm going to turn it over to Mr. Castillo.
Good morning, everybody. My name is Alexis Castillo. I'm a financial center manager with Bank of America in the Southwest Miami-Dade area. As everybody has mentioned, and I apologize for sounding like a broken record, but yes, take advantage of this time, interrupt as much as you can and want. We're here to not only present information that we already have, but more than anything to answer your questions, right? Our presentation has a lot of information that unfortunately we will not get to cover because we do have a little bit of a limit on our time, but that's okay. Any questions that you guys have, ask them. We will get the answers to you, and hopefully you can take something away from this presentation today, okay? So we can move to the first slide, Tanya. Okay, so as you guys are going to see shortly, we have a few different topics that our presentation covers. We'll be mostly focused today on banking basics and credit. Those are items that are probably going to be most relatable to you guys. Obviously, if you have other questions, please feel free to ask them. But that's basically where we're gonna have most of our focus on. So if we can move to slide number 4, I believe. Okay, so we're going to start off with banking basics and what a bank is. So a bank is an institution where you're basically going to park your money. And by doing so, you generally will get paid for the money that you have parked here with us. We are then going to turn around and lend your money to somebody else who has a need for it, whether that be to purchase a home, a car, or various other reasons. Now, why would you do that? Why would you put your money with us so that we can give it to somebody else potentially, right? Well, again, so first and foremost, it's your money. We're keeping your money for you, and we're paying you for keeping your money for you. So, I mean, it sounds pretty good, right? But again, as I mentioned, we will then lend that money, and that's how we make our revenue. So that money that's being paid to you or being paid to us, that's interest, and that's paid out as a percentage. So based on whatever you have here, we're going to pay you a percent, where then they're going to turn around and lend that to somebody else, and they're going to pay us a percent for borrowing that money. Okay. Now, So why a bank? Well, in addition to earning you money, we're also going to help you safe keep your money, right? So there is a organization that was developed by the federal government called the Federal Deposit Insurance Corporation, or FDIC, and essentially they're going to guarantee the money that you have in the bank up to $250,000. So that money is going to be safe. It's going to be guaranteed. If the bank burns down, your money's not going to burn down. You're still going to have that available to you. It's protection for you as a consumer. And it's one of the major benefits of parking your money in a bank versus keeping it at home under the pillow, mattress, whatever the things that you've heard, or jokes, or whatever the case might be. Because unfortunately, God forbid, something happens, and that money that you had at home, once it's gone, and you cannot get it back. Okay. In addition to earning you money and to protecting your money, it's convenient. Think about walking around with a lot of cash. Think about walking around with $100,000 on you. It's not very convenient to do so. It's easier to have it parked at the bank. You let us manage it while you still have access to the different methods, which we'll cover in a little bit. In addition to that, it's going to help you manage how you are able to transact and keep track of those same transactions, right? Through different channels like online mobile banking, things of that nature. You can always see what it is that you're doing on a daily basis to help you keep track of where your money's going. Okay. And in addition to that, building a relationship with a bank is extremely important. Why is it important? Well, because it's going to have an impact on your capability to achieve goals in the future. A big goal that I would imagine, and I hope that all of you have, is to buy yourself a nice Tesla or buy yourself a nice home in the future. Those things can be achieved by having a good relationship with the bank, because the bank is going to basically be the one to lend you the money to be able to do those things. Okay. So we can move on to the next slide. Okay, so I'll pause very briefly. Does anybody have any questions?
No.
Okay, so we'll move on. So as I mentioned, interest rates are how you get paid by the bank, and how the bank gets paid by others as well. So there's a lot of factors that go into determining an interest rate. Some of it can be the type of account that you open. Some of it can be the amount of money that you have with the bank. And there's other factors such as outside factors like what we're currently going through now with the pandemic that will have an impact on interest as well. But again, essentially what's going to happen is you're going to park some money with the bank. The bank is going to offer you a percent of that money to pay you every month in order for you to keep that with us. Once we have that, that money secured, we then have it available to lend to others, and then we'll charge that other person a higher interest rate, and that difference is how we make our revenue. So while we're here to help you and do various things, we are a business, and we got to make money, and that's how we make our money. So I see that there's a question already in the chat. What if you get bankrupt? So while that's not necessarily part of the conversation that we were looking for today, I'll touch on it very briefly. So if you're not 100% sure what it is to be bankrupt, essentially, when you're bankrupt, you are no longer able to pay your obligations, and you essentially don't have any money to do that. So there's different ways that you can go through a bankruptcy, but it's basically, even though it sounds good, it's not necessarily good. It is a way for you to no longer be obligated to pay debts that you have. But that is going to follow you for a long, long time. And it is going to make it very difficult for you to do things with your credit in the future, specifically purchasing a home or even a car. So we'll cover a little bit more about credit in the second half of the presentation, but hopefully that answers a little bit of the question. Now, having a bankruptcy doesn't necessarily impact your ability to have a bank account or earn interest on the accounts that you have with the bank. Okay. All right, so we can move on to the next slide if there's no additional questions. All right, so in addition to knowing that it's a good idea to have a bank account, one of the main things that you got to think about is choosing a bank, right? So some of the things to consider, like you see on the screen, is where's the bank located? Are there branches nearby where you live, where you go to school, where you work, areas that you commute to make it easy for you to have access, right? And then especially in today's world, even pre-pandemic, what kind of digital access do you have? What is the online banking or mobile banking platforms look like? Do they give you the ability to do the types of transactions that you want to do? One of the things that I'm very proud to say is that Bank of America invests very, very heavily in our digital banking platforms. For the most part, with the exception of getting physical cash, you pretty much don't even need to come visit us in a financial center to achieve most of your banking transactions. Or even servicing your accounts. Anything from doing transfers to paying your bills to something as simple as changing your address once you buy that home that you want to buy and you moved into it. Those things can all be done through our online banking platforms. Okay. ATM access is another one that you may not necessarily think about, but is also important, right? When you use ATMs through the institution where you bank, it's a free service for you to access your physical cash or to deposit to your account, at these remote locations. Now, when you use ATMs from an institution that's not related to you, the bank that you bank with, there's generally fees associated with it. So availability of ATMs is also important, especially if there may not necessarily be a branch around you, or you're not able to get to a branch during our regular business hours. Okay, and then most importantly, especially for our audience today, is what kind of student offers does that bank have? At this point, most banks will have some sort of offers or products, services that are tailored specifically towards students. And that's because, we want to help you, number one, start building a relationship with the bank. And number two, help you develop good habits. And then number three, we want you to be a customer for life, right? So when you come in as a student and you open your first checking or savings account, we're going to talk to you about everything that we can provide to you as a student. And we want to start planting some seeds so that you can be with us for your entire financial life. So anything from your very first job to your retirement and those, and all those things in between. That's why it's important for you to, understand some of these things, because while you're always able to switch banks, a bank really, really values long-term relationships. Okay. We can move on to the next slide. So within banking and your bank accounts, there's going to be two very common types of accounts that you can open. In addition to these two accounts, there's a lot of other types, but these are going to be the most common and the ones that you will more than likely be using the most often. So you can open a checking account and a savings account. Your checking account is essentially where you're going to be conducting your transactions on a pretty much a daily basis. Anything from withdrawing money at an ATM to paying your bills, or to using your debit card to make purchases at the store or whatever else it might be. Okay. Now there generally does not tend to be any kind of limitations on the checking accounts. They will more than likely have some sort of monthly maintenance fee associated with having the account open. But again, most banks want to keep your business, so they're going to offer you various opportunities to maintain that account without having to actually pay for it. Okay. Now, the checking account does not pay you any interest. So any money that you park in a checking account is basically going to be there for you to transact, but you will not get paid on it. All right. That's where the savings account comes in. So a savings account, in addition to now paying you interest, is really there for you to, achieve some financial goals that you have, whether it be a short-term goal, like going to a concert, or it might be a long-term goal of taking a vacation, purchasing a car, purchasing a home, and you guys are going to hear those things come up quite a bit. That's really why you would want to have a savings account, is to have money in there parked. You earn money on it, and it's going to help you achieve those long-term and short-term financial goals that you have. Now, with that, there are some limitations, right? So you will not have access to transact as regularly. There's no debit card for your savings account. So you can't go to the grocery store and make a purchase directly from your savings. And in addition to that, you're also limited on the number of times you can take money out of those accounts. There's different fees that potentially could be associated with taking money out too many times. And there's other items that can have an impact when it comes to actual federal government regulations. Okay. Do we have any questions so far on how banks work or the basic account types? Okay, so we'll go ahead and continue on. So in addition to knowing the type of accounts that are available to you and knowing the type of bank or researching the bank, there's some other things that you want to consider when you're looking to open an account, right? As I already mentioned, specials, especially for students, is one thing that you all should be very interested in, because in most cases, it's going to be a way for you to be able to have a bank account and have that bank account for free. There's other things like opening requirements. How much money do you need to deposit to open that account? Do you need to maintain any balances to avoid any fees or to maintain the account open? Is there any fees associated with the account that aren't necessarily just maintenance fees? Because believe it or not, yes, there are times where you will have to pay when you conduct certain types of transactions from a checking account or a savings, even if the account is free to you. There's other things that you can see on the screen, again, withdrawal limitations, transfers, how easy it is to replace the account. Those are all things that you want to really look into and questions that you want to ask when you're sitting with somebody or as you're doing your research online before you make a decision on the account type, okay? All right, so thank you. All right, so in addition, to the account types and all the different things that we've already covered, you have different ways that you can access your money. As we stated at the beginning, there's always the possibility of having cash on hand, but the downside to that is that physical cash is not secured. Should it get stolen, should it get lost, that money is gone and there's no way for you to get it back. As we mentioned, by keeping it in the bank, you have that federal deposit insurance that's going to protect you, and it's going to be much safer. In addition to that, that's going to allow you to use some of the other items that you see on the screen in order to access your funds. So for those of you who are not familiar with debit cards, again, debit card essentially is a piece of plastic that will work as if you had cash on you without physically having the cash on you. It allows you to make payments directly in stores, online, take money out from the ATM if you actually do need cash. And again, it's going to be more convenient than carrying large sums of money on you. And obviously much safer because again, you lose your debit card, you can cancel it and the money in your account is protected, right? So in our pre and post pandemic world, digital wallets were something relatively new that were gaining traction. So even though they were introduced about 10 years ago, they really hadn't started to pick up until recently. So essentially a digital wallet is just that. It's a digital wallet that you're going to keep on your smartphone or smartwatch at this point. It allows you to carry your debit or credit cards on your phone or other device without actually physically having the plastic on you. Again, safe in the aspect that you don't have to worry about carrying a bunch of cash, and it's going to give you the exact same access as a physical plastic card would give you, okay? And then the last way that you can access funds from your accounts would be through credit. So credit, again, essentially is going to be how it's money that you're borrowing temporarily from the bank, and you'll be paying it back. It's going to offer the most protection because your checking and savings accounts are not going to be directly open to anything as if you're paying with credit. So if you were to lose your credit card and somebody were to find it, they will not be able to use funds in your checking or your savings account. And you'll be protected when it comes from a fraud liability standpoint. Obviously, there are some caveats or downsides to credit that you do need to make sure you're aware of. You have to manage it smartly, or you will potentially be paying to use that money. So those are things that we'll cover in a little bit, but you definitely want to keep that in mind. All right. All right, guys. We'll pause for a quick second. Do we have any questions?
No.
No. Okay. So before we move on to the next section, when it comes to managing your money, we'll take a quick look at a video that's going to talk about budgeting, right? So that's going to lead us directly into the next section. So if we can go to ways to save on your monthly bill, Tanya.
Finding ways to save money may be easier than you think. By setting aside just a few hours, or an afternoon every now and then, to do a little research on some of your biggest monthly expenses, you may be able to save hundreds, maybe thousands of dollars a year. Here are some ideas to get you started saving on some of your bigger expenses, things like television, cell phones, utilities, and insurance. Almost everybody loves television, and it's no secret that services such as satellite or cable TV can be pricey. Thinking about how you use your TV could be a good way to start trimming expenses. For example, you may consider switching to antenna TV. The technology has come a long way since the days of bunny ears. and so has the quality of the picture. The FCC has an interactive map that shows which channels you might get in your zip code. Check out fcc.gov to find out more. Combining antenna TV with the occasional movie rental or an online streaming service, like those web-based services that have shows and movies that you can binge watch all weekend, might cost you a little bit up front, but it could save you hundreds of dollars over the course of a year. Now, if you decide to go with satellite or cable, shop around and negotiate. You may find a cheaper option, or your current provider may be willing to lower your monthly payment to keep you as a satisfied customer. A couple of phone calls could save you money each month. Speaking of phone calls, you may want to look at your cell phone plan to see if you can cut down on costs there too. Data and texting plans can be expensive, so make sure your plan reflects how much or how little you use your phone. You might also make some changes to your habits that could help you trim costs. If you use a smartphone, there are apps that allow you to track your data usage and even set alarms when you get close to a monthly limit. By avoiding large downloads on the go, you might be able to scale back your plan. Prepaid plans might also be a money-saving option. Or you might consider a family plan if you have more than one person in your household. Just remember, as with anything, pay attention to all the details of the plan when shopping around for deals. Finally, if you need to use a phone for your work, you might consider checking with your employer to see if they might cover your cell phone expenses. Or if you're self-employed, you might be able to get a tax deduction for your phone expenses. Next, let's look at housing. It's probably your biggest expense. If you rent, you might be able to ask your landlord about giving you a better deal when it's time to renew. Take a look at the going rate for similar apartments in your area to see if it makes sense to renegotiate. Most landlords don't want the vacancy that comes with the turnover, so if you've been a good tenant, they may be willing to work with you. And when it comes to household expenses, energy can be a big one, particularly if you're a homeowner. A programmable thermostat is one way you can save. They're relatively easy to install, and they can help you save significantly on your heating and cooling bill by raising and lowering the temperature automatically when you're not at home or when you're asleep. You can go one step further by getting an energy audit of your home. Your utility company may offer free energy audits that can give you valuable ideas on how to save on your energy bill that are specific to your home. You can start to find out more and get additional tips on saving energy from the Environmental Protection Agency's Energy Star website at energystar.gov. Another place you may be able to save big is on your insurance. Many people bundle their policies, such as homeowners and auto insurance, with one carrier. That can often bring substantial discounts. You might also cut some insurance costs by making upgrades to your home, like installing a security system. And if it's been a few years since you've shopped for insurance, you may want to shop around instead of just renewing. This can be particularly helpful on health insurance if you're responsible for buying your own insurance, since the prices of these plans change frequently. There are several websites where you can compare plans and prices, but pay attention to what the plan offers and the details, such as premiums, deductible amounts, and co-payments. The least expensive option may end up costing you more if it doesn't cover what you need. It may be hard to get started, but just a little bit of research and a couple of phone calls could make a big difference in your budget almost right away. And sure, spending an afternoon researching your monthly expenses may not be as thrilling as, say, a day at the beach, but rolling up your sleeves and doing some work on this may help you save hundreds, maybe thousands of dollars each year. That's money you might spend on a vacation at a beach.
All right, so why do we see that video? Well, because in addition to saving money at the bank, being able to save money on things that you're paying, your expenses, whether it be daily, weekly, monthly, yearly, is very important for you to be able to achieve your goals in the future. And it's all part of budgeting and having a smart budget. If we can go to the next slide.
We have a question on the chat.
Yes.
Anne is asking, do you need to look at all the options before buying something to find something better or cheaper?
Well, and we're going to touch on this in just a bit, but yeah, it makes sense, right? Now, are you obligated to? Obviously, no, you're not. You can do what you're comfortable with, but shopping around, like the video said, whether it be for car insurance, things of that nature, and looking at all your options is generally a pretty smart thing to do. It's going to help you find the rates or the prices that are going to make the most sense for you, that fit within the budget, right? So you're going to have a certain amount of money set aside that you're willing to pay for the service or that good or that item, and you don't want to exceed it, but you obviously want to pay less if you can, right? So yeah, definitely looking into the things that or shopping around into the things that you're interested in or that you need is usually a smart way to go. I do see that we have another question. How do you get a tax deduction? So if we're talking about income taxes and filing your taxes, that's a different conversation. We'll hope maybe answer some of it in the same segment as we're talking about budgeting. So if I don't necessarily answer the question, please chime back in the chat. Okay.
Okay, so what I was saying, what I was saying is because in the video they said that if you are like self-employed, you can get tax deduction to purchase a cell phone. So I was saying, how do you get that tax deduction to purchase the cell phone?
Okay, so that's going to have to do with your income taxes, right? Those are things you definitely want to talk to an accountant for. They're the experts when it comes to how to save money on your federal tax obligations. But that's going to be related to how you use your phone. Generally, if you're a business owner, there's certain expenses that you have that you can have them associated with your business, such as your phone or even your car. That'll help reduce the tax liability or the amount of taxes that you owe. Okay. But again, I would strongly recommend for something like that, you definitely want to speak to an accountant because they're going to be your best resource as they're going to be the experts when it comes to everything with tax laws and regulations. Okay. Okay, so in addition to kind of what we already spoken about saving money in the accounts, saving money with the purchases or shopping around, the other half, right, is knowing how much money you have coming in. It can be anything from your salary from your job, any tips that you might make based on the type of job that you do, gifts if you get an allowance. Making sure that you're well aware of all that money coming in is going to really help guide what your budget is going to look like, right? Because at the end of the day, the idea would be to spend less than what you have coming in so that you have extra cash on hand to achieve those short-term or long-term goals. If you exceed your budget, it's going to put you in a deficit and it's going to make it more difficult to achieve some of the things that you're looking to do. If you constantly spend more money than you make, it's going to be very hard to save to, buy a house, for example. I'm sorry, 1 second. We can move on to the next slide. So when it comes to the income that you're earning, there's a couple of things that you have to be well aware of. I'm sure some of you probably are already working or have been working for a good amount of time, so you may already be familiar. But for those who aren't, the money that you earn isn't necessarily the money that you're going to take home. That $100,000 salary that you might be looking to earn, you're not going to take that and put it all in your bank account. Reason is there's different types of deductions or reductions to your income. Some are obligations that you don't have a choice on, and others are optional, right? So like you see on the screen now, the number 2, those are all your pretty much your obligated deductions. Those are the taxes that you pay to the government for various things, right? So your income tax is what's going to help support the government in order to be able to pay government officials and various other projects and things that they may be working on, which obviously, you hear all about that in the news. In some states, you also have to pay a state income tax for the same reason. Now, we're lucky enough here in the state of Florida that we don't have that state income tax. So your money is going to go a little bit further here than it would in let's say, New York, which is another reason why you see a lot of people from states like California move to Florida because, again, their money's going to go further since they don't have to pay that additional tax. Then you have things like your Social Security that's going to help support you when you retire. You pay a portion of that now up front. And then Medicare, same thing. That's going to help you with your health insurance later in the future. Then your optional deductions are things like your health insurance. So whether that be your medical, your dental, your vision insurance, things like your 401k, so your individual retirement plans. Those are all optional deductions. But again, important to keep in mind because that's all going to reduce the amount of money that you're taking home or that you're putting in the bank, right? So keeping all of these things in mind, in addition to trying to save where you can, is going to help you build a smart budget, right? So if we can move on to slide 17. So kind of touching back on the question that we had from Anne, about looking for your options, right? So the final part of really having a smart budget is understanding the things that you need versus the things that you want, right? So while you may need to buy a car, you may want a certain type of car, but that might not necessarily be the most financially sound option, right? I would love to drive a Lamborghini. It's a car. I got to drive a car because I don't live close enough to work to walk. But driving a Lamborghini may not be a sound financial decision because it is very expensive, right? So those are the types of things that you want to consider. And it goes back into, if you should be looking at options, comparing absolutely 100%. One of the other examples that I gave was coffee. I do drink a lot of coffee to get me through my days. Now, if I were to purchase my coffee at the grocery store and make it at home, it's going to save me quite a bit versus going to Starbucks every day. I'll spend $2 or $3 on a carton of coffee that'll probably last me about 2 weeks. Versus if I go to Starbucks, it's going to probably be about a $5 trip every single day. So if you want to do the math, you can see over the course of a year, it's a pretty significant amount of money that I would be saving by buying a carton of coffee at the grocery store every couple of weeks. So it might be something that I feel that I need, which is totally fine. But it's about how you go about it, right? So again, looking at your options and trying to find the thing that makes the most sense financially, right? All right. Do we have any questions before we move on? All right, if we can move down to slide 19. So to wrap up our portion on budgeting, again, basically, again, the important takeaways are you have to know how much you make. Keep in mind the different types of deductions that are going to happen on your paycheck because unfortunately, you're not going to take everything home that you think that you earned. From there, you have to know what you need and you have to know what you spend your money on, and you want to save where you can. Again, that's going to help you put money aside to achieve those bigger goals. Again, taking that vacation back home. So you'll have to adjust the way you spend money. Again, might love that Lamborghini, but it may not make sense if I want to take that vacation, next year, because it's a lot of money that I'm going to be spending that maybe I don't need to spend. And again, that's all going to help you save by making those sound, smart financial decisions. Okay. All right, so we're going to go ahead and cover credit if we don't have any additional questions on budgeting. So if we can go ahead and cue up the video of how to build credit from scratch, Tanya.
How do I build credit from scratch? Building your credit for the first time can feel a little like the chicken and the egg. To build a good credit score, you're going to need to take out a loan or get a credit card. But you can't qualify for a loan or get a credit card without some credit history, right? So what do? Let's start with a bank account. You don't really need a long credit history to open a checking account at your local bank. In fact, you may have one already. Even though a checking account won't necessarily help you build credit history with the bureaus, that account may help you get your first credit card or loan from the same provider. You see, if you already have a history of doing good business with the bank, they know you and value that business. That existing relationship can carry some weight when it comes time to get your first line of credit. That is a good first step, but if that's still not enough, here are a few other things to consider. Some banks offer credit cards for folks who want to establish, strengthen, or even rebuild their credit. It's called a secured credit card, because you secure the amount you borrow with a security deposit. In other words, you provide collateral by depositing money in an account with the bank, something the lender gets to apply a portion of, or all, should you default on the loan. Your credit line is equal to the amount you deposit. You won't be able to touch that money or use it to pay off your balance, and you'll still have to prove to the bank that you have sufficient income to pay the credit card. The good news is that the bank will be more confident that you'll pay them back, even without great credit, allowing you to build or rebuild your credit. Since you'll be using your first card to build your credit, you want to make sure that, once active, your lender will report all those on-time payments to the bureaus before you apply. Most banks and credit unions do this, but some retail store cards, for example, don't. So make sure to check ahead of time, and if your payment history won't be reported by the card issuer, you may want to keep shopping for a card. Also, don't apply for a bunch of different cards if you keep striking out. All those hard inquiries and declines aren't going to help you build a score. Keep in mind, a secured card is different from a prepaid card. A prepaid card allows you to load the card with a cash amount ahead of time to spend later. Prepaid cards are great for people who need a Visa or MasterCard to make a purchase, and can be a terrific gift idea. But they won't help establish credit. Another way to build credit is to see if there's someone who might be willing to co-sign a loan with you. This can be any adult who is creditworthy, including your parents or spouse. When someone co-signs a loan, you get the benefit of their good credit history, and this may help you get approved. You can then build your own credit with a good history of payment on the co-signed account. Now, whoever co-signs the loan for you is taking on a really big financial responsibility. They'll be on the hook for the debt if you run into trouble, so it's not something you should ask for lightly. When you do get credit extended to you, it's important to keep managing it carefully, even after you've built a history. You're doing the right thing by getting off on the right foot. Now make sure you keep those good habits the rest of your credit life. This will help you build a long, positive credit history that will eventually result in a really good credit score.
All right, guys. So why is credit important? Well, credit is important for a couple of factors. First and foremost, it's going to be the report card that follows you for the rest of your life, right? As the video mentioned, it's going to tell banks and other lenders whether or not they want to do business with you, and they're going to rate that based off of your credit history and your credit score. So it's very important that you take care of it. So following some of the steps in the video to build credit early is going to go a long way. The earlier you can get started, the better, because again, without having good credit, things like purchasing a home or a car can become very, very difficult in the future. Now, why do you want credit? Well, you want credit because you may not necessarily want to spend all the money that you have in the bank. While it might feel good to have, $500,000 sitting in the bank, it's not going to feel as good giving that to somebody to purchase a home, right? So you would take a mortgage out, you would borrow the money from the bank so that you can keep your money sitting there in case you might need it for an emergency or something else. But to do that, you need credit, right? Now, at the same time, having credit is a pretty tricky responsibility, because if you don't manage it properly, it can definitely get you into trouble financially, especially if you overextend yourself, right? So back to the earlier question on the bankruptcy, when you do not properly manage your credit, you're going to be owing more money than what you have available to you, right? So it's all part of the budgeting that we already covered. So making sure that you're being responsible and not spending more than what you have available, is very, very, very much key. Now, when we go back to our credit score conversation, if we can go to the next slide, again, the credit score essentially is going to be the report card, right? That's how banks and lenders are going to rate you in terms of whether or not they want to lend you money or how much it's going to cost you to borrow that money. So there's a few factors that go into your credit score. The two most important, which are the two that we'll focus on, is your payment history and your credit utilization. Payment history is pretty simple. Are you making your payments on time? And are you paying the minimum amount that is being asked of you, right? So as you use your credit cards, or as you're purchasing your cars or any of those other items, are you paying that company or that bank that lent you the money? Are you paying them every single month on a timely basis? If you are, that information is going to be reported to the credit bureaus, and they're going to reflect very well on your credit history. all right, that's going to make up roughly about 35% of your credit score. So while there's a lot of factors, and you can see 5 of the big ones on the screen, there's other things that go into it, but that one item is going to be the single most impactful on your credit. Okay. So I see a question in the chat: do you have to pay the bank every month? If we're talking about credit, if you owe something, yes, you definitely will be paying it every month. If you have a credit card that you don't owe any money on, in most cases, there generally are not fees to have the card open. So if you come to Bank of America and you open a credit card with us and you don't use it, there's no charge. Now, that's not always the case, but I would say probably, 85% of the time that will be the case, where you won't have to pay if you don't owe. But if you owe, you have to pay. So same thing, you have that car loan, you do have to pay that every month, because there's debt that you have, there's money that you borrowed that needs to get paid back. Okay. In addition to that, the amount that you owe, or the utilization of your credit, how you use it, is going to be the second most impactful item. So what do we mean by credit utilization? Basically, of the credit that's available to you. So of your credit cards, the loans that you can pull money from, how much of that money are you using compared to what you have available? So if you have $1,000 in credit available to you on your credit card, you want to keep what you owe when the bank reports less than 30%. So on that $1,000, you don't want to owe more than $300 at any time. Can you owe more? Absolutely, you can, but that will have an impact on your credit score. Now, if you need to owe more because it's going to be the right financial plan for you to pay down over time, that's fine. Just keep in mind how it impacts your credit report. So I see that there's a follow-up question. If you owe the bank, can you pay it in full, or do you have to pay every month? You can pay, again, how you're comfortable with within your means. While we're always going to recommend to pay in full every month, that's going to be the most financially sound decision. Obviously, there's going to be situations where you either cannot or maybe decide not to, for various factors, right? Now, there's a myth that you want to keep money on your credit cards owed every month so that the bank can see that you're a good customer. It's a myth. The more that you can pay every single month, the better. I'm going to give you a little secret. Even if you're paying your credit cards in full every single month, the banks still make money on you using your credit card. Every time you swipe it at a store, the bank is going to get paid. So we don't need you to owe money to us to make money. Okay. So don't fall into that trap. Don't believe that myth. If you can pay your credit cards off in full every single month, you want to do so. That information is going to get reported to the credit bureau, as I mentioned, as part of your payment history. And that's going to give you the biggest and best impact on your credit because your utilization, or the amount of credit being used, is going to be very low. Okay. Do we have any other questions on credit score and credit utilization?
Yes, I have a question.
Yeah.
Will secure credit card help you build your credit more than the regular credit card?
So the secure cards generally will have a higher interest rate, right? And that's due to the fact that if you're going to be applying for a secure card, you either likely have very little credit history, or you're rebuilding your credit because of whatever situations that may have occurred to put you there. So generally, again, you can think of it as a punishment, I guess, if you'd like to, but it's just the cost of doing business. So going back to thinking of your credit score as that report card that's going to follow you, the better that report card looks, the more willing banks are going to be to lend you money, and they're going to do so by offering you lower interest rates, right? They want to entice you. So once you open that first secured card, as long as you behave with it, you're paying it on time, you don't owe too much money on it, you'll eventually start to see that you'll get invitations from other banks, or even this, or hopefully even the same bank, to apply for more cards. And when they start offering you terms, you're going to see that those interest rates are going to start to get lower. And again, that's to entice you in the future to borrow money, but it's going to be at a better cost to you, since you've been doing well with the secured card. But again, to answer the question, yeah, in almost every case, the secured cards will have a higher interest rate. Some companies may also charge an annual fee. So about the question before, if you have to pay something for having the account, in some cases you may. That is definitely a possibility, and that's definitely something you want to consider when you're shopping around to open a credit card or even the first credit card, right? In the future, even though you may have great credit, there are still cards that have annual fees because of the types of benefits that they give you. So those are all things that you definitely want to consider. Okay, appreciate the question. Do we have any more? Okay, so we can go ahead and go to slide, I believe it's 26, to go ahead and recap. So again, having credit is extremely important. It's going to allow you to make purchases that you either may not necessarily have all of the money available for at the moment, or it's going to allow you to continue to have that money by extending the payments over time. But doing it smartly or doing it, with a plan is not only the most important, but to be perfectly honest, also the most tricky. So you have to make sure that you have a sound budget prior, so that you know where you can spend and how much to spend. That's going to allow you to build credit so that, again, in the future, you can do things like buy that home or buy that nice Tesla or Ferrari or whatever the car of your dreams might be. Your credit score and your credit utilization is going to really help you do that and achieve those goals by making it very affordable for you to borrow money, right? Because again, as we talked about at the opening, the banks will charge you interest. So again, the cost of borrowing money whenever you need to borrow, right? But you want to keep that low by maintaining a good credit history and a good credit score, okay? All right, so I think we have about another 10 or 15 minutes or so.
Yes, until 11:45.
Okay, perfect. So I believe the next section was financial security. So we'll go ahead and we'll touch on that if there's no other questions, or we'll continue to ask questions as they come. So why do we talk about financial safety? Well, again, we're in a digital age. Unfortunately, as things in technology progress, the bad guys will find their ways to circumvent and to try to gain an advantage, right? So with so many things being digital, there's an understandable pause, right? Why do you want to have your mobile app with your banking account information on your phone if it can potentially be exposed? Well, again, it's just like anything else. It's about being smart, right? The things that you do on social media, for example, can have an impact on how easy it might be for somebody to, figure out what your passwords are. So thinking about all those types of things is very, very important. So like you see on the screen, you definitely want to make sure that you're being smart about the types of passwords that you're using. As much of a pain as it might be to have different passwords for your email, for your bank account, for your Facebook or for your whatever accounts that you have, it's usually the best way to go, right? Especially now with digital wallets and things, there's a lot of additional protection, so you can secure your phone through biometrics, right? So I hope and I would imagine everybody's familiar with the Face ID on the iPhones or the fingerprint readers that are on a lot of the Google phones these days. Setting those types of things up are going to tie into pretty much any banking application that might be on your mobile device, so that you don't necessarily need to be inputting your password. You don't have to worry about your password being exposed because somebody has to have your face essentially, or they need your fingerprint in order to be able to get into the information that's on your device. So keeping those things in mind is very important. Also, you see a lot of updates. A lot of times you don't see anything change when you update that app, but there might be changes on the back end that are going to continually make it more secure. You don't always hear about it, but companies, especially companies like banks that are there with so much personal information, are constantly investing in the best technology to make sure that we can keep you and your money safe. We do have an obligation to you because we do have a lot of your personal information, right? we know where you live, we know your name, we know your date of birth, we have your social security number, we obviously have your money, right? So we have an obligation to you to keep all of those things safe and secure. And we do that by investing in technology that's going to allow us to do that. So when it comes to security, again, any bank at this point, in addition to certain federal guidelines that we have to adhere to, everybody's always going to go over and beyond to make sure that we do our part. But at the same time, you also have to keep that in mind when it comes to, again, the passwords that you set, and then using some of the security tools available to you through the different devices, right? Do we have any questions on this or anything else?
I have a question, Alexis. One of the schools that did this same presentation 2 days ago, someone asked the question, is it safe to use mobile banking on an open public network like Wi-Fi? Like if you go to the park or the grocery store, is it safe to use your mobile banking, when you're out in public?
So that's actually a very, very good question. In most cases, yes. Is it going to be preferred? Not necessarily, right? Because again, we're always going to do everything that we can to make sure that from a technology standpoint, our applications are going to be as secure as possible. But unfortunately, there's always going to be that off chance, right? That somebody may have been able to find a way to circumvent the system. So while in most cases it probably is not an issue, if you can avoid it, again, it's about making smart decisions, right? So even though you might feel comfortable because it's a place that you visit regularly and you haven't never had any issues, maybe using the actual mobile network might be a little bit of a better choice because it tends to be a little bit more secure, right? The communication is a little bit more direct with the carrier versus having an open Wi-Fi network. So can you do it? Yeah. Is it a problem? Probably not. Is it the most ideal way to go about it? No, it definitely isn't. But as we've been talking about, a lot of the things when it comes to banking, and really in general, it's about having the right type of plan and mindset, right? So know the information and make the most informed decision. So again, you can definitely use those open Wi-Fi networks. Is it the most secure? Not necessarily. Are you going to have a problem? Not necessarily. But if you can avoid doing so, you probably should.
Thank you. I have another question in the chat. So this is, can you download apps to help you protect your account and phone?
So yes, a lot of phones these days, especially on the Google side, do come with antivirus, anti-malware, things like that, like you would have on your computer. Because again, as the technology progresses and our habits change, the types of devices that we're using obviously are shifting, right? So people look to move, the fraudsters and all that, they look to move with the technology as well. So yeah, I mean, you have other things like I know iPhones have password keepers that are secured through your biometrics. So again, when you have multiple passwords, that might be hard to keep track of sometimes. Some of your devices already have some of that technology built in to help you, right? But again, it's about making sure that you're using it the best way possible. So if you're going to use some of those apps, you definitely want to make sure that you're using them in a way that only you have access, right? And again, you're going to do that through biometrics. So making sure that you have, the right passwords saved, but only being able to use them when you use your fingerprint. And things of that nature, making sure that you have your antivirus and running those scans if they're not already running in the background, just to make sure that you don't have any kind of funky software installed on your devices. Okay, and I see that we do have another question. And when you're out in public, how can you get a private Wi-Fi so people can't hack? So that's going to really be dependent on the technology available where you are, right? Ideally, even if it's on a private Wi-Fi network, if you can avoid it, you want to just use the actual phone's data network. So, if it's a Verizon phone, you just want to use Verizon's data connection as the ideal way to connect, right? Okay, what other questions do we have?
I have another question, Alexis. Is it correct to say the more income you have, the better your credit score, or the worse your credit score? Is that a myth that people feel that if you have a lot of money, you may not be able to pay off your debt, so you have bad credit versus someone that doesn't have as much money? Can you talk to that, please?
Absolutely. So while the amount of money you make can have a direct impact on your credit, the two do not go hand in hand. They are not. They're not married to each other. Somebody who makes $20,000 a year can 100% have a better credit score than somebody who makes $1 million a year. It's all about, again, making informed and smart decisions and how you manage, right? That person who makes $1 million a year, if all that money coming in, they're spending it and they're not spending it wisely, and they're constantly owing money and they're overextending on their credit score is going to reflect that. Versus the person who makes the 20,000, if they have a smart budget and they're spending only what they need to spend, their credit score will reflect that as well. So while obviously having more money or making more money can potentially give you access to buy more things that you may want, it does not guarantee you a better credit score. That's all going to be, again, how you behave essentially with the money that you have and with the credit that's available to you.
Perfect. Thank you. I think that was something that was important for the students to hear.
Yeah, again, we can't stress enough. And anytime you come into when you come into a bank, the people that you speak to should really stress that having a sound financial plan is going to be the most important thing that you can do. The earlier that you can start, it's just going to make it easier for you in the future. Especially when we live here in Miami and homes cost what they cost. Being able to be prepared from an early age, even though you may not know what necessarily be thinking, at 16, 17, 18 years old, you're not necessarily thinking about that house that you want to buy. You might want to start thinking about it, so even if that goal might be 10 or 15 years down the line, starting as early as possible is going to make it that much more achievable for you. And it's going to build a lot of discipline that could potentially help you in other areas, right? So, as you guys see the last slide, as we go to wrap up, it's all about being informed. We at Bank of America, we're very big on financial literacy or being financially fit. So much so that we've partnered with the Khan Academy. So there's a free website available to anybody and everybody. You don't need to be a Bank of America client to have access. What you see on the screen there is Better Money Habits. So Better Money Habits is a great website. It has a ton of information on anything related to finance that you can think of, whether it be credit, investing, again, even just basics on how banks work, like we covered earlier. Use it, learn about it, and put that knowledge to work. It's just going to make everything easier for you in the future. So, at the same time, visit your local bank. If you already have a relationship, go in and see your banker and just pick their brain. Let them help you build a plan if you have some goals that you want to already achieve. I'm sure everybody has something they want to do. Again, it could be something as simple as taking that vacation or buying that new car, or again, it could be a longer term goal like buying a house, like we've already mentioned. So, the earlier you can get started, the better your plan is, the more structured it is. It's just going to be much easier for you going forward.
Thank you very much, Alexis. I'm going to go ahead and stop sharing. I just want to say thank you for your time, Bank of America. This concludes our third and final session. I learned so much. I can't tell you how much I learned, and I've been banking for years. So you never stop learning. I hope this was something valuable for your students, Miami Edison Senior High School. Take this and learn from this experience. If you have any questions, please send them to your teacher and they will send them to us. But I want to pass it over to Ms. Mezadou, who will close us out. But thank you very much, Alexis and Tommy, for your time today. We really appreciate it. And I will be reaching out to you separately after this.
Yes,
Over
thank
to
you. Thank you very much, everyone. We have a presentation and you can go now. Share your screen. Talk.
On behalf of Miami Edison Senior High, Mr. Maycock, Ms. Mezadou, and all the students, we would like to thank you for taking your time out of your schedule to present the financial literacy topic for us. And Ms. Mezadou would like to share her screen to show the certificate of appreciation.
I'm disabled for some reason, Tanya. For some reason, I can't share on my end. Oh, okay.
Can you share? Oh.
Yeah. So again, thank you very much. As Ann said, we really appreciate your taking the time to come out and present to the students. So we wanted to give you this virtual, it's going to be digital that I was sending out to Ms. Reynolds on our behalf. And Mr. Maycock, I was waiting for him to come in as well to also thank you. So I'm hoping, I think I've got everyone. It's Alexis, Tommy, Crystal, and of course, the infamous, famous Tanya Reynolds. Thank you so much for helping us out. We really appreciate it. So this is something that we do. We really want to give you something to tell you that we appreciate the time and the effort that you take to come out of your schedule just to speak with the kids. And that's something we really we're not going to take for granted, and we really appreciate it.
Yeah,
Thank you, Ms.
so
Mesidou.
much for this thoughtful gesture. I can tell you it's been an amazing experience for all of us, including myself. So, I just want to thank you again for your hospitality, for your engagement, and for giving us this opportunity to discuss financial literacy. And I hope that this won't be the last event. So find us, and we'll be more than happy to do it all over again.
Okay, thank
Yes,
you.
thank you so much, Ms. Mesidou. This was wonderful. I just appreciate the certificates and for your heartfelt words. It means so much to us. I take this as a success for today. And we will be working with you hopefully in the future, because this is just the beginning. We have
Okay.
many more years to go from this. So thank you very much, Miami Edison Senior High, and Ms. Mesidou for your participation and putting this all together on your side. So thank you.
Thank you. Okay, students, once we log off, you're going to go into your regular Zoom for